Hello everyone, welcome back to TechnoCharts YouTube channel, and in today's video I'll talk about how to trade stocks that are stuck in a range. As we all know that most of the time the stock market or the stocks are in a sideways zone, and hence the stocks are stuck between support and resistance and trade between them for a very long time. So how do you trade such stocks that are already stuck in a range, and how to make a profit is our main aim for this video. Now, let us understand what is the logic behind trading the stocks that are stuck in a range. So, basically, when a stock is stuck into a range, the stock is moving between the resistance area and the support area. While this resistance and support act as a key area of supply and demand, the moving averages tend to turn flat and will be sideways zone. So, this is how you will understand when a stock is in sideways zone or not. Now, let us understand the role of moving averages in identifying the trend of a stock. So, if the moving averages or the 21 EMA or the 50 EMA are trending up, then that is known as an uptrend. If the 21 and 50 EMA are trending down, that is known as a downtrend. And if the 21 and 50 EMA are trending in sideways like this, then it is known as a sideways zone. And we are only looking for those stocks that are stuck in a range similarly like this. Okay. So now let us look at the thesis. We are looking for stocks that are in consolidation. These stocks, when hit the demand zone, provide excellent risk to reward opportunity. They will be below all the key moving averages and hence will not be in a momentum. So these stocks are not good for momentum trading, but rather for swing or positional trading for a longer period of time. And hence, you should be looking for these stocks for a target of around 15 to 20% with a stop loss of around 5%. How to draw the support and resistance? Look for stocks that are in consolidation for a very long period of time and use the rectangle tool or a range tool to identify the box and marking the high and low of the box, and keep alerts at the higher point of support and buy when the alert hits. So let us now look at the charts to understand what exactly I mean by this. Now, let us understand the role of moving averages in identifying the trend of a stock. So, if the moving averages or the 21 EMA or the 50 EMA are trending up, then that is known as an uptrend. If the 21 and 50 EMA are trending down, that is known as a downtrend. And if the 21 and 50 EMA are trending in sideways like this, then it is known as a sideways zone. And we are only looking for those stocks that are stuck in a range similarly like this. Okay. So now let us look at the thesis. We are looking for stocks that are in consolidation. These stocks, when hit the demand zone, provide excellent risk to reward opportunity. They will be below all the key moving averages and hence will not be in a momentum. So these stocks are not good for momentum trading, but rather for swing or positional trading for a longer period of time. And hence, you should be looking for these stocks for a target of around 15 to 20% with a stop loss of around 5%. How to draw the support and resistance? Look for stocks that are in consolidation for a very long period of time and use the rectangle tool or a range tool to identify the box and marking the high and low of the box, and keep alerts at the higher point of support and buy when the alert hits. So let us now look at the charts to understand what exactly I mean by this. Now, looking at this chart, you can see that Polymedicure is stuck in a range for a very long period of time. Now, let us apply the moving averages to understand the role of moving averages in this. Now let us look at the chart of Polymedicure. In this chart, as you can see that the stock is in sideways zone for a very long period of time. If we apply the moving averages, we can see that the moving averages have all turned flat. The only use of moving averages in this type of trading is to identify the trend of a stock. So as these stocks will be in consolidation period, there will be multiple signals in moving averages, and hence the moving averages have no role in the buy or sell of a stock. Now let us understand how to draw the support and resistance in this chart. So if we can see that the area where the stock is trying to reverse is basically known as support area if it is moving up from there, and if it is falling from a area, then it is known as a resistance area in this chart. Okay. So using the rectangle tool that is available at the side of the box here, if we click on this, we can see a rectangle tool. Now the only rule you have to follow in this trading is you also have to select the lowest point. That means you have to select the tail or the wick while considering the support and resistance, because these are the point that are key areas of reversal in a chart. So let us now draw the support and resistance. If we look at this chart, we can see that this area was a good area of support in this, or we can also shift this to the lowest point in this consolidation period, and this would be an ideal support for this stock, because we can see there are multiple types of reversal that is happening here. Or one could also shift the support at this area, because we see a majority of support or the reversal that is happening is around this area. So these are the two supports that we can see in this chart, and particularly we can also draw the resistance in this, and this is a perfect resistance that we can see in this chart, right? So in this we have drawn the support and resistance. Now we will look at more examples to draw the support and resistance in the chart. So in case of Apollo Tires, as you can see, the chart is also sideways and the stock is sideways from a very long period of time. Now let us draw the support and resistance or the demand zone for this stock. And as we can see that this clearly has to be the demand zone for this stock, and this clearly has to be the supply zone. Okay, because the stock is turning down multiple times from these areas. So this is how you have to draw the support and resistance for the stock that are consolidating for a bigger period of time. So look for consolidation that are more than 4 to 8 weeks, and that could also lie up to few years also. Now let us look at some more charts to understand the support and resistance for the stock. So in this case of JSW Steel, we can see that this clearly has to be the support area for the stock, as the stock is reversing from this from multiple times, and this clearly has to be the resistance 1 for the stock, and this has to be the resistance 2 for the stock. Now we have drawn two types of support and resistance. Uh, Looking at some more chart, for example, in case of Birlasoft, if we look at the previous chart, we can see that this was consolidating for a very big period of time, and finally it broke out of consolidation and again went back to consolidation period. So this helps in tracking stocks that are in consolidation, and you may also write the trend even after the consolidation breaks out. Okay, now let us look at what could be the entry areas and what could be the target areas in our charts. So if to illustrate you, let me draw one support area and let me draw a resistance area in this. Now as we know that the stock will trade into this zone like this for over a very long period of time, we will only look for stocks that are trading in the lower range of the resistance or in the upper range of this support area, and keep an alert near the area of around 3 to 4% above the support area. So if this 100 is the support area for this stock, we will have an alert kept at around 103, 104, so that whenever the alert hits, we get to understand or we get to know that the stock has now touched the lower part of the support and is now again ready to bounce back. So in case of JSW Steel, as you can see that the stock has now turned into sideways zone and is now trading at the lowest point of support. So this could be an opportunity for buying this stock, as the stock is having a low risk high reward opportunity. For example, if you could take an entry at this point, so let us draw the risk and reward ratio in this case. So if we take an entry at this point, keeping the first target at this and stop loss just below the support area, as you can see that we get a risk to reward ratio of 1:3. Why are we keeping the first target as this? Because we have seen that the stock is falling from this multiple number of times, and now this could be a very low risk high reward opportunity for the coming future. Looking at the entry rules, entry should be as close to support as possible and not anywhere in between. To keep minimum stop loss, it is advised to buy near the support and not in between the range. So to explain what does it mean is, if this is the range of the stock, you should not buy this stock in anywhere in between, and rather try buying the stock only near the lower range and shorting the stock only near the upper range, because during this period there will be high volatility and the buyers and sellers are in equilibrium, so they will try to push the price up also and down also, and hence your stop loss will get hit majority of the time. So bigger the consolidation, stronger the support, and it could be used for longer form of trading and not swing trades, as the stock is not having any kind of momentum. So this was a Ramco Cement chart that I had shared in the Telegram group, and I had given a call at around 945 with a target of 1050. So we got the target hit using the same strategy. And Granules India chart, we can see that the stock is stuck in a very nice range with a stop loss at around 280 rupees. So if we look at the chart currently, we can see that Granules India is stuck in a range, and if we draw the support and resistance, we can have a very low risk high reward opportunity in this case. Okay, so keeping the stop loss at around 280 rupees and target at around 330 rupees, one could initiate a long trade in this. But the problem with this kind of trading is it could take a very long period of time. We don't know whether the target will get hit in a few weeks or few months. As the stock is in range, the stock has no momentum, and hence there will be a problem with time. Ideally, your stop loss should be max 8% from your buy point. The closer you buy near the support, the smaller your stop loss will be. As mentioned, do not buy in between the range, and moving averages don't work as stop loss in sideways market, and hence moving averages shouldn't be used as a reference for any kind of trade, right? So we can see Interglobe Aviation. If we buy here, we can't keep a stop loss anywhere in between, and hence ideal buy point, keeping a stop loss below the buy point and keeping that as a target. And we can see how we have seen beautifully the target got hit. But if we check at the time frame was around 1.5 to 2 months, and hence that could be a problem. Your capital may get stuck in this kind of trading, and you may also have to have a lot of patience while trading this strategy. So this was all from my side regarding this trade, and I would suggest you to not go aggressive in this kind of trading, because the stock may get stuck for a very long period of time, and hence look for stocks that are in momentum for quicker returns. Okay, so thank you from my side, and let's see you soon.